as a lawyer, not just understand law, understand how businesses think and operate. And that is why for every decision you're about to make as a partner to a business, you want to understand what the business outcome is, right? Why are we doing this micro task? What is the end goal? What are we looking to achieve? And so when you have the business outcome in mind, you're able to go out of the realm of, because there are times when, in all honesty, you just have to forget the law for a minute. I'm not saying breach the law. I'm saying forget the law for a minute and try to achieve that business outcome.
Yeah, welcome back to the second segment of Just Africa. Of course, you can follow us on all our social media platforms at Sook News TV. And of course, subscribe to the Just Africa show on our YouTube channel. So moving on to the second segment, I want to ask a very big question. I need you to come closer. Now, the question is this. If an investor asks you today this big question, are you a startup or you're just running a business? What would you say? Is a question, right? Yes. So we have someone who will help us unpack or answer that question, because most times, most founders tell you, yes, it's a startup, it's a startup. This lack of clarity has deprived so many people from knowing whether they are actually a startup or they are running a business. So joining us today on the second segment is Godwin Idoko Amayi. I hope I pronounced that well, Esquire. He's a corporate legal compliance expert. And you know what? He explains why not every business should chase venture or adopt a startup-style governance when the fundamental tools do not support it. So first of all, I need you to meet my guest. Idoko, Godwin, are you there?
Pleasure meeting you, and thanks for having me.
Thank you for staying tuned, and welcome to the show once again.
Thank you very much.
Okay, so first of all, let's understand something. When we hear startups and we hear businesses, and these people have messed up many times, what is the difference between a startup and a business that is already doing well?
I think the idea of startup right now, especially in Africa, it just sounds like success. And to some, it actually sounds modern, right? It sounds fundable and it sounds like you're really doing something big. That is why most businesses, regardless of whether they qualify as a startup or not, are very quick to label themselves as one. In terms of the differences, I would say that there's just one key difference, which is scalability. And by scalability, I mean, how quickly can you scale as a business? Yeah, most often than not, you find startups scaling as quickly as they can. In fact, they are very quick to achieve growth. And while the regular businesses, you find them, they are relatively stable. It's difficult to find a business that is a regular business that is established and then goes out of extinction over time in just a short period of time. And so the key differential here is scalability and repeatability. As a startup, what you have, the product you've built, how quickly can you scale, and how quickly can you really repeat the process without actually, burning too much cash? Because as a business, for you to scale, you need to have, most often than not, the physical structure in place. As a bank, you need to set up a location for you to be able to and then if you're looking to expand, you need to set up another branch and so on and so forth. But for a startup, you can scale so quickly. And you can just have a team of engineers in a room, right? And with some of the operations person, all in an apartment, and they are reaching thousands and millions of people, even with outside the shores of the country. So scalability is the main differential, I would say.
Okay, so scalability. Now, the fact that some persons don't understand the difference or what makes a startup different from a business or traditional business is one thing. Now, what kind of confusion do you think startup and traditional business, the confusion of the meaning of these two, what confusion do you think it has caused in the African ecosystem?
First of all, mistake is very expensive here in Africa. It is important you get clarity as to whether your business qualifies as a startup or a traditional business. Because just like I mentioned, capital is very limited. Regulators are even getting more strict on some of these startups. And most often than not, founders don't always get a second chance, right? So, and you can't compare us to like those in the silicon where they get the luxury of fail fast, right? But you don't get a second chance here. And that is why it's important that you get that differential. Yeah. So once you have that out of the way, I think the clarity is what matters. And once you have that out of the way, then you can then sit down and then decide on what path to take, because these are separate models. And so if you don't know, if you're as a startup, if you're adopting a model fit for a traditional business, you are bound to fail. And if and vice versa, right? And so that clarity is so very important, I would say.
Okay, so why do investors care whether you are a startup or whether you are a strong business already?
There are different kinds of investors, right?
Yeah.
And some are focused on investing in startups, while some are still very comfortable investing in traditional businesses, right? So if I am an investor, a venture capitalist who is focused on investing in startups, and you find a really good business, right? A traditional kind of business coming to me and saying, we want you to invest in. Does that really fit into the kind of business I'm open to invest in? And they also, most investors, I would say, usually find investing in startups as a very juicy one, because it still takes us back to scalability. They know they can get 50x their investment or return on investment overnight. And that is something you typically cannot get with a traditional business. And that is why when they look at your cap table, they look at your business model, they look at the term sheet and all, they look at the business objects. It becomes so they're able to tell and give that different distinction, even if the founder, quote unquote, decides to, still play the game of claiming to be a startup rather than a traditional business.
A founder who do not understand whether he is a startup or he is already practicing traditional business, what does the person stand to miss at any point in time?
First, if your founder should be able to honestly assess scalability, right, before making any structural decisions. And to be able to assess that, they should be able to ask themselves simple questions, very simple questions, right? If you're not there, can the business continue to grow without you, right? And can your income actually grow? In a way, can it actually grow faster than your expenses, right? I mean, based on how much you're putting out there, can you typically 10x, 20x, or 50x your income in a short period of time? And then you want to ask this question, can this business model actually achieve unicorn status? Because that's very important. And by unicorn status, I mean achieving the threshold of $1 billion or above. And when you ask yourself these very simple questions, it becomes, you are able to honestly tell, right, whether your business qualifies as a startup. So it's very important you lay those foundations from the start. Otherwise, when you're far into, and then you've commenced operation already, it becomes, and then you start reevaluating whether we're a startup or not, it becomes very disastrous at that point. And it's just important you have that clarity. Again, it goes back to the word clarity from the start. It's part of the foundation, I would say.
Yeah, you are a lawyer. So can you give us maybe a practical example or on how clarity, understanding, or let's say, I'm trying not to use the word money here, but can you give us some example on how founders have been saved from financial struggles due to being the clarity, not living in delusion of being a startup or a traditional business?
So I think one example that comes to mind is, I would not mention names, but I once worked with a founder who is like in the waste innovation management service. They actually provide waste collection and recycling services. And they were actually looking to expand. And their question, actually, in fact, they were holding themselves out as founders and startups, right? But then after a little back and forth, it became clear that they were just a traditional business because to be able to, and they came out seeking for investment, right? And they were actually poaching investors, venture capitalists who are actually focused on investing in startups, right? And because there's one thing that comes along with getting investment from VCs, there's a lot of pressure that comes alongside it. And you can't afford, especially at the early stage. I know there are a lot of options which many founders do not know. There are a lot of alternatives to raising funds beyond just approaching a VC or an angel investor. And so after the back and forth, it became clear that they were just a regular business, and they did not actually need or require that much business, that much funding to be able to scale. If they had gotten that much funding, they probably would have wasted it on getting a fancy office space, or just inflating the salary paid to workers, or getting additional, which would be additional funding cost to the company. And so getting that outright from the start not getting it outrightly from the start was a big mistake from their end. However, they were able to follow through, and now the business is stable and profitable with no investor pressure, and that's something one should always consider.
Yeah.
Especially if you're a founder who does not like pressure and all of that. Venture capitalists are just there to, they're giving you their money, so you need to turn up.
Exactly.
Yeah.
Okay, so looking at Africa, what model do you think that we need to adopt so as to help us build businesses, or also funders per se? Let me not just use the word we, so that funders will be able to operate at the level of sustainability. Like you said now, your investors feel that we've given you money, so it's just for you to go on, excel, and we have to get our return. So what are the models, global models, that African founders, African business owners need to adopt to ensure that we are doing the right thing to help our businesses scale?
So I think a mindset shift would be to build what your market actually needs, not necessarily what is trending, especially in the world of AI. You find a traditional business incorporating AI into their business, and then they feel they now qualify as a startup, right? So you need to, after getting that clarity, it's important you also build what your market actually needs, and not rely on hype or what actually looks good online. Because I believe that a business that's actually that lasts is actually better than a traditional business that lasts, right? It's actually better than a startup that collapses, which is why you shouldn't be chasing those money from the start. As a business, you should be more. As a startup, you should actually be more passionate about your vision, more than the amount of money you think you can actually generate from there. And so once you have that mindset, you're able to filter the noise, and then just treat it like a business. When a startup is a business, right? It's a business, which you have to treat it as such. And it's so unfortunate that they also do not have that. Most founders are not. They are not business oriented, which is also a problem, right? And they also need to learn mindset shift. Understand that when investors give you money, they are giving you on the basis of in trust, and they believe that you will turn up in multiple folds. So the mindset, just build what people actually need, and not what you feel is now in vogue. AI is now in vogue. Okay, let's build an AI platform that, so just be real with yourself in terms of the impact you feel your product is going to be making in the society. And
All right, thank you very much. Now, can a small business outperform a fast-growing startup?
Small business?
Yeah.
Well, no. You've just qualified it as a small business, right? And a small business, in the eyes of the law, let me put it that way, is one that whose annual turnout or revenue does not go beyond 50 million or thereabouts. Okay. And so if that is the case, I think 50 to 100 million, if that is the case, a fast-growing business, a fast-growing startup turns annual revenue is typically between, I think, 500 million to 700 million. That's like a fast-growing, and until they achieve unicorn status. So that takes us to scalability. But then there are traditional businesses that still outperforms. Now we are not speaking of them being small now, but there are traditional businesses that still outperforms fast growing startups, right? First Bank, for instance, all of these traditional banks are not startups, right?
Okay.
But they are doing well. They are listed on the stock exchange and so on and so forth.
Yes.
Dangote is not a startup, right?
Yeah.
But his business is a conglomerate, right? Well recognized.
Yes.
And there are many other companies. There are many other companies, Mikano and the likes and so forth. And so the point here is being a traditional business does not mean you cannot make billions of naira, right? It just means that there's this higher financial commitment required of you in terms of manpower, the number of staffs you're required to hire and to be able to function or scale, and so on and so forth. So it is not a case of how much money can we really, whether a startup can make more money than a traditional business. It is now a case of, okay, I do not have so much money to spend on manpower, getting staff, putting different branches in place. How can I reach out to more customers, even from the comfort of one apartment? And that is where the edge comes in. But both models can actually make as much as they really want to, right?
Okay. All right. As a lawyer, I love the fact that you're a lawyer, so I can ask this question conveniently. So, what roles do lawyers have to play aside documentations, especially at the early stage of decision making? What roles can they play?
Beyond documentation, first of all, I think it's very important you position yourself as a partner, right, in legal innovation, a legal partner in innovation. And that is what my brand actually represents. And what that means is a startup is not just reaching out to you to, okay, please, I need a document reviewed, and then you just do that and then you're off. No, you need to be active in the business, and that comes to providing legal advisory, because most of these founders do not really have it all figured out. And there's the general assumption that lawyers knows everything, right? I don't know how true that is, but we are quite vast in
no one
terms
knows
of how
everything.
much we really know.
No
right?
one knows everything.
Right? And it's also important you, as a lawyer, understand business, not just understand law, understand how businesses think and operate. And that is why for every decision you're about to make as a partner to a business, you want to understand what the business outcome is, right? Why are we doing this micro task? What is the end goal? What are we looking to achieve? And so when you have the business outcome in mind, you're able to go out of the realm of, because there are times when, in all honesty, you just have to forget the law for a minute. I'm not saying breach the law. I'm saying forget the law for a minute and try to achieve that business outcome, which is why you just need to be more of a good advisor to the founder than just somebody who is there to draft documents and scope. Yeah.
Okay, thank you very much for your insight this beautiful afternoon, Gordon Idoko. Thank you so much for joining us on Just Africa.
My pleasure.
Yeah, I hope when we reach out to you next time, you'll be able to join us again.
Let me just say this, that in relation to this topic, clarity is power, right? So when founders understand what they're really building, they're able to make better decisions. And as a result, their business lasts longer. So every founder, every business owner should have that in mind. Thank you.
Thank you very much for that beautiful, should I call it signing out? Thank you so much. Okay, so today's episode of Just Africa has shown us that, yes, clarity is key. It's very important. Clarity is better than correction. When you understand something, you won't make mistakes. You will obviously avoid so many mistakes. So for a startup, for traditional businesses, for whatever it is, get clarity. Ensure that whatever you're doing, you understand it. You talk to people, talk to lawyers, if need be, talk to other persons who are also in the line of business so you have a better understanding of what you are doing. And that's how we've come to the end of today's episode of Just Africa. You can follow us on all our social media platforms at Sook News TV and subscribe to the Just Africa YouTube channel. I am Omevi Idolo. Thanks for watching.